Today, we're going to be talking about how to get a loan for vacation rental property. How do you get a loan for vacation rental property? Are there different loans when it comes to vacation rental properties versus traditional real estate transactions? Well, there actually can be. And throughout this video, I will walk you through the ins and outs of getting a loan so you're never left in the dark with vacation rental financing. Getting a loan in any real estate transaction can feel like pulling teeth. And I'm not going to sugarcoat it. It is pretty unpleasant, to be honest with you. But there can be certain things to do and certain things to know when it comes to different loan programs that can drastically change your loan experience when it comes to real estate investing. So let's dive in by first understanding what loans exist for vacation rental properties. Second, I want to talk about a loan program that is specific for vacation rentals. And finally, I want to give you some pointers that I've learned over the years by acquiring 6 properties in 14 months. If you're ready, let's go. So what type of financing exists for vacation rental properties? Before we jump into that, we've got to make sure that we even want to buy a vacation rental property, that we have the numbers behind it that justify purchasing and getting a loan for vacation rental property. Because most of the loans you get, number one, either your personal income has to be able to front the cost, you have enough income to be able to support that debt service that a bank's going to put on you, or the rental property itself has to make enough money for it to service the debt that's put on that property as well. So one of the things I tell people is you've got to dive into the financial aspect of it. And usually having a very powerful short-term vacation rental calculator is going to help you understand how that works, because you're going to put in all the income, the payment for the mortgage, which is principal and interest, insurance, taxes, all of the expenses associated with it. And it'll be able to spit out to you whether it can service that debt or not. That's absolutely vital when it comes to analyzing the property. And that's one of the first things you need to do is get your vacation rental calculator or find access to one where you can do that deep dive analysis on the financial part. Because if you have that information, getting the loan is going to be so much easier, especially on some of the loans we talk about in this video here. So the first one, the most common one, is traditional bank financing. Now, if you go to the bank and say, listen, I want to buy this home, it's an investment, it's going to be a vacation rental property, they're going to say, awesome, we need 20 to 30% down for that property. So if you're buying a home that costs $500,000 that's a vacation rental, you're going to need $100,000 to $150,000 just in the down payment. And let's be honest, that's always the challenge, right? You go to the bank, you're thinking, I want to put down as little as possible because I'm a smart real estate investor. I understand leverage. I understand the less money I can put down. And if I can service the debt with the property, I'm appreciating the property. They're paying for all of my expenses associated with it. And I own a really cool asset. At the same time you're saying that, the bank's saying, I want as much money from this person as possible because I want to secure my collateral. I want to make sure that if anything happens, anything goes haywire, that I've got enough collateral, enough equity in this property that I could sell it like that and not have to worry about it. The banks are not in the business of owning real estate. So even though you might want to put as little down, they want you to put as much down, and that's always the battle, right? So traditional financing, you're going to be fighting whether it's 20 to 30%, and it depends on how financially strong you are as a borrower to be able to make that decision. Now, one of the cool things with a vacation rental property that is different than other investment properties that I've seen is there is a loan where you only have to put down 10%. It's a second home loan. And that's the type of loan I got on my Blue Ridge property in Georgia, and a partner that I brought on the Broken Bow, Oklahoma property only put 10% down too. So think about it. We purchased those properties both around $520,000, $550,000. We only had to put down 10% of the purchase price to acquire those properties. Absolutely amazing when you think about it. And it made our cash on cash returns that much more lucrative, that much better. So a second home loan, if you don't have on your credit report a second home, you can definitely get this loan with a bank. So let's talk about what do you need for these traditional bank loans? The answer is a lot. You're going to need W-2s, tax return, personal financial statements. They want to vet you as a borrower to make sure that you can service the debt on this loan. So they're going to require a lot of documentation to make sure they can do that. And it goes through an underwriting process, which is tedious, it's annoying, it's challenging, but it's necessary, right? And so you're going to need a lot of documentation. I always tell everybody, if you're going to do that, make sure you have a file on your computer where you can store all of these things that you're saving for loans. So if you ever get another loan, you have all that stuff accessible and available in one folder. But there's a current loan out there that's absolutely amazing, and it's specific for rental income producing properties. And it's called the DSCR loan. It's beautiful. It feels like it's tailor-made for the vacation rental industry, short-term rental industry. And I've talked about this in other videos, but it's worth a deep dive in this video, so let's jump into it. So a DSCR loan, it's debt service coverage ratio loan. It's specific for rental producing income properties. And it is put in place to have the income from the property to service the loan rather than the individual borrower. Nice thing about it, you don't need any W-2s, no income verification. It is for properties that are currently cash flowing and is a great alternative for vacation rentals. Here's the other cool thing. Most times it only requires 15% down, but it does require 12 months of a rental history to show that that income can service the debt associated with that property and that loan. One of the other things I really like about the DSCR loan is they're only calculating in that monthly payment and that monthly expense certain things like taxes, insurance, if there's an HOA fee associated with it. But if you as the owner are planning for more expenses like maintenance, utilities, it doesn't factor that into the valuation of whether you can get a loan for this property or not with a DSCR loan, which is pretty amazing because those other expenses are going to be part of you making money on the property. But the DSCR loan doesn't look at that, which is nice for you as a borrower. So what is needed for DSCR loans? Well, you need an application, you need a credit app, and as I mentioned, you need 12 months of rental history. You're going to need bank statements, you're going to need insurance, and you're going to need corporate documents like LLC docs. But not much. When compared to a traditional loan, you don't need that much, which is why these have become so popular over the last few years. These DSCR lenders require few documents, and it's more of a common sense type of loan, which I love that. Think about it. If you're getting a loan on a piece of property that you want to make money from, and the goal that you have is to make money from it and grow an asset that appreciates, why wouldn't you get a loan that is based off of the income that comes in from that? If the income can service the loan, why doesn't that asset stand as the borrower, for example? Because if the money's coming in and it can meet and service the debt, that's the way to do it rather than basing it off the individual. So I love DSCR loans for that reason. Now, when you're trying to get a loan for a vacation property, here's a few things, a few hacks that I think are vitally important when looking to finance a vacation rental property. Number one, always have a lender you can rely on. If you have a lender in your back pocket, a good friend, a buddy who at any time has a lot of your documentation and can help you acquire a loan, that is somebody important to have. Now understand, certain lenders can't loan in certain states, but typically if you have a good friend that's a lender, he has access to programs that traditionally he can probably finagle or be able to get loans in different states. It's always good to have one in your back pocket. Lenders can be your best friend. And I mentioned this earlier, but always have a folder where all your stuff is stashed on your computer so you can easily access those. It'll save you time, energy, money, frustration. So if you're saving bank statements, if you're saving brokerage account statements, have those saved, but also have the passwords, the usernames saved on a place where you could easily go retract those things and get them over to your lender to make things timely and necessary. Because typically you're closing on a property within 60 to 90 days. And if it's on a quick time frame, the banks or the lenders, they need that information as quick as they can to begin the underwriting process. So having those readily available and getting it over to them quickly is vital for you to close on your property in a timely manner. And finally, one thing that I think is also really important when it comes to lenders and getting a loan for vacation rental property is utilizing local networks. And I mean where you're buying the property at. So when I bought the property in Blue Ridge, Georgia, and when we bought the property in Broken Bow, Oklahoma, I went to the realtor they were utilizing and said, listen, can you give me a lender that has a track record of getting these deals done, that has special loan programs that you can put me in contact with? Each time the person they put me in contact with was the lender who got our deal done in a timely manner. And it's been an absolute game changer. They know the area, they know what the banks want, and they have a great relationship with the realtor. So being able to have those lenders going local in the area that you're buying is an absolute game changer. Now, these are some things that I've done to get a loan for the vacation rental properties that I own, but I'd love to hear your feedback. What have you done? And as I mentioned earlier in this video, you need to analyze these properties with a vacation rental calculator, which I will give you 100% free access to. No frills, no gimmicks. You just click on the link below, aaronsfreetraining.com, and it'll give you access to the exact same vacation rental calculator that I've used to analyze my properties. You put in the income, you put in the expenses, and it'll spit out to you, do the analysis, whether it's a good deal or not. It'll even give you the cash and cash return. And this is just for stopping by, watching the video. Once again, thanks for being here. Have an amazing day.